All right, well, let's start the show at this hour with the latest on Canada's economy, because obviously everyone is feeling uncertainty in the air, but coming into this stretch, there were some things to smile about. Canada's economic growth accelerated last quarter with a more than 2.5% annualized pace of growth. That was driven by household spending, our exports, business investment. The Bank of Canada's interest rate cuts are seen to have boosted household consumption, which was up more than 5.5%. And you could make the argument the economy had found its footing with a solid job market and inflation under control. However, a looming U.S.-Canada tariff war is putting a lot of the positives into question, and the Bank of Canada's future decisions are likely going to be guided by whatever plays out on the tariff front. For more on all of this, let's bring in Dawn Desjardins. She's chief economist at Deloitte Canada. Dawn, it's great to see you. I guess let's start with what this all tells us about where Canada's economy was sitting heading into this moment of uncertainty.
Yeah, it was a very strong report. It's finally some really solid good news, which, given how much we're speaking to clients these days, it's a welcome relief to be able to say something positive for a change. But as you say, the looming tariffs are definitely having an effect on confidence. We saw consumer confidence measures in Canada having come off just like they've done in the U.S. So it's a little bit of a reprieve in terms of sentiment, but I do think we're still headed for very rocky days ahead.
The global markets are ruled by numbers and decide at different points what numbers they want to focus on, right? Yeah. If it's earnings season, sometimes it doesn't even matter what happened in the quarter. Everybody wants to know what's going to happen in the next quarter. Yeah. So how much stock should we even put in this data, given everything that everybody's talking about right now?
Well, it certainly shows that the Bank of Canada's rate reductions did have an impact on the economy. The consumer spending, as you cited, very strong in the quarter. And so that, that is heartening to some degree, because it does suggest that we are seeing some momentum as we head into this very tumultuous period.
Yeah.
So certainly when we think about how the economy is going to perform, we had a good handoff. January was also, at least in the preliminary number, a strong start to the year. But I do worry because we have seen this deterioration in confidence. And that is something that people tend to pull back pretty strongly when you're not sure exactly if you're going to have a job, what it's going to look like as we go through the months ahead.
Yeah, since we like to talk about numbers, how are you trying to quantify that? Because I think in the air we have heard that, right? It doesn't take now the actual implementation of tariffs. The threat of tariffs has had an impact on sentiment. But I guess, I'm just going to throw out a hypothetical, because right now we've got an early March tariff plan from the U.S. president that was delivered yesterday. What if he sort of stretches that out again? And what numbers are you going to be watching for in the interim if we're doing this back and forth that will tell you, okay, we are actually starting to see that weakness in the Canadian economy?
Well, I think we're going to be, of course, watching the labor numbers, but also, again, it's this confidence measure. We do a CFO survey, and this was just after the U.S. election, but before the tariff threat. And in that very small window, Canadian companies were already very, very nervous. Now, we did see strong investment activity in the fourth quarter, but when they were asked, is now time to take on risks? 70% of these CFOs said no. In a broader North American survey, 67% said yes. So Canadian companies are extraordinarily nervous. What does that mean in terms of job losses? Right now, doesn't mean too much.
Yeah.
But as we look forward, if our auto industry comes under pressure from these tariffs, we've already heard from companies saying, well, we're going to have to shut down some lines. So it's worrisome.
And look, our economy is made up of big businesses and small businesses. I was talking to somebody yesterday who had some clients who you might call them sort of mid-market businesses that feed a lot of business into the United States.
Right.
They've already been talking with their customers. And the message from those longtime customers is, I love working with you, but if we're going to have to sort of deal with this tariff issue, you're going to have to keep your prices steady. Right. Otherwise, we're just going to find another supplier to deal with. We hate to do that, but we do. And so I think for some businesses, they're staring in the face of literally having to shut down their business.
Right.
So let's say we get to next week and it's tariff time, and everybody's been asking the Bank of Canada what they're going to do. Doug Ford was just elected to his third term, and we said in our newscast sort of the mandate was he wants to be fiscally ready to respond to tariffs. What will Canada have to do, whether it's monetary policy or fiscal support, if businesses have no choice but to shut down?
Well, I think it will probably be more incumbent on the fiscal side of the equation. The Bank of Canada has one tool. As we know, it has been effective. But this is a shock to the economy, and that isn't necessarily going to be able to address these big concerns that businesses and big problems are going to be encountering. So when we think about it, yes, they can help adjust, kind of smooth as we go through this period. But I think from the bank's perspective, they've done very material cuts so far, so setting us up. But I think it will be a fiscal story.
And I have sort of one ripple question for you. When interest rates were at higher levels than they are now, we kept talking about this wave of mortgage renewals in Canada because so many Canadians are deeply indebted because they wanted to have their piece of the Canadian dream and own a home. And you talked about watching job numbers. That's going to be one thing you're going to determine for softness in the economy. I would assume if you lose your job, that all of a sudden starts to make it more questionable what happens with sort of the payments in your life. What do you do with your home? How closely will you be watching the housing market as a potential ripple effect here? Oh,
certainly. That is something that's top of mind. And as you say, we've been talking about this refi wave for 2025, 2026. And already we are seeing some mortgage and arrears numbers ticking higher. Now, it's not outlandish in terms of the magnitude or the number of these mortgages and arrears. But having said that, as we go forward, if we see wobbles on the labor market side, that could certainly be a catalyst because, yes, rates have come down compared to their highs, but they're much higher than where a lot of these mortgages originated. So we have savings. We saw the savings rate come down, but we're still, for 2024, a very high savings rate. So we know there's a little bit of insulation there. But if we go through a wave of significant job losses, we will definitely be seeing a lot of hard times for homeowners.
Well, let's hope that this situation can get resolved, but it has been a period of uncertainty. It's great to have you back here, Dawn. Thanks very much for making sense of the numbers.
Thank you.
Dawn Desjardins.